One of the biggest mistakes sabotaging your ability to reduce your taxes is not choosing the wrong tax strategy, although that's disastrous too. Failing to take action is most expensive for you. You may qualify for legitimate strategies that could substantially reduce your tax liability, but if you do not implement them correctly and timely, those opportunities may disappear. Don't wait until your tax return is being prepared to begin planning. By then, your options may have already been gone. At the same time, don't rush into every tax strategy you hear about, especially online. The strategy may be legitimate, appropriate for your circumstances, economically sound, and properly implemented and documented to be effective. Hi, my name is Angie Bhasin, CPA, Certified Tax Strategist, and founder of FinTax CPAs. I help high income earners and business owners like yourself keep more of what you earn, grow your net worth, and my mission is to make taxes less stressful for you. Tax preparation and tax planning are not the same. Tax preparation records what's already happened. Tax planning gives you an opportunity to influence what happens before your financial decisions and transactions become final. IRS is not going to contact you and say, "Oh, you could have established a retirement plan. You should have changed your business structure. It's costing you more. You could have qualified for a valuable deduction or a tax credit. You could have planned differently before selling your business, exercising your stock options, or completing a real estate transaction." The IRS is not responsible for helping you pay the lowest legal amount of tax. Managing your tax liability is your responsibility. Your responsibility. I've seen taxpayers identify very legitimate strategies that could potentially save them tens, hundreds, and even thousands of dollars, but they still fail to implement that. Why does this happen? Well, sometimes it's procrastination. Sometimes it literally is fear of making a change. Sometimes you just don't want to take the steps to get there. Sometimes you just become so overwhelmed by the implementation process. And sometimes you just spend so much time researching for that perfect strategy that you fail to implement a very good and appropriate strategy that's already available to you. Inaction is still a decision, and it can be an extremely expensive one. Once the year ends and a major transaction is completed, you can always go back and recreate the proper structure and then try to document and participate or manage the timing. A strategy that could have produced tremendous value may become completely unavailable simply because you waited too long, because you procrastinated, or because you let fear get in the way. What should you do? Number one, begin planning early. Don't wait until December or until your tax return is being prepared. Planning should occur throughout the year and before any major income event, business sale, stock transaction, real estate transaction, or any other significant decision, apart from your overall high income. Number two, quantify the opportunity. Understand the projected tax savings, the implementation costs, the risks, cash flow requirements, and long-term financial impact. Your CPA should be able to model these out for you. The objective is not merely to obtain a tax deduction, though that is what is important for you. It is also to make a sound financial decision that generates measurable value and fits your situation and your goals. Number three, create an implementation plan. Determine what must be completed, who is responsible, what documentation is required, and all the applicable deadlines. A good tax strategy without an implementation plan is really only an idea. Number four, schedule regular planning reviews. Your income, your investments, your business operations, your personal circumstances, they're not static. They can change throughout the year. Quarterly reviews allow you to update your projections and adjust your strategies while there's still time to act. Number five, coordinate your advisory team, your CPA, your attorney, your financial advisor, payroll provider, and all other trusted advisors may each hold a different piece of the puzzle. If they're not communicating with each other, important opportunities and significant risks can easily be overlooked. And here's what you absolutely should not do. Don't implement a strategy simply because it is popular. It is on social media. Everybody's talking about it. You heard about it and somebody's implementing it. Do not focus only on the potential tax deduction while ignoring the investment risk, the cash flow requirements, whether that strategy is suitable for your custom situation or not. Don't assume that identifying a strategy is the same as implementing it. And don't wait until after a transaction is completed to ask how the taxes could have been reduced. Now, there are circumstances when that can happen, but the best time to plan is before a transaction happens. Your tax liability is likely your largest lifetime expense. It deserves proactive management and it deserves a competent team to be with you. And it's not a once a year reaction. Don't wait until your tax return is prepared to discover what you could have done. Very, very important to work with a competent CPA who specializes in planning and not just compliance. Plan early. Understand your options. Make informed decisions. Don't let the tax dog wag the tail. And take action while the opportunity is still available. Because in tax planning, what you fail to do and when you fail to do it can cost just as much as making the wrong move. If you're paying significant taxes and you want to determine whether proactive planning opportunities may be available to you, connect with our team at FinTax CPAs. We'll be happy to do a review of your situation, of your business entity, of your overall financial situation and see what can be done for you to help you save. If you found this helpful, follow and subscribe to our YouTube channel at FinTax CPA 6377 so you don't miss other tax saving strategies. Subscribing is easy and free to you, and it helps me bring more advanced tax reduction strategies used by billionaires and big corporations to mainstream taxpayers like you and I.